Let me introduce myself. My name is Bagus Yohan Irnando, with student number 224-11024, from the Management 22 DX class. In this video, I will be presenting on the topic tax collection systems, types of taxes, tax rates, and the functions of taxes. Tax collection systems. Taxes are mandatory contributions paid by the public to the state without direct compensation, and the funds are used for public purposes. There are three main tax collection systems. 1. Official assessment system. In this system, the government has the authority to determine the amount of tax that must be paid by taxpayers. Taxpayers only need to pay the amount set by the government. 2. Self-assessment system. In this system, taxpayers are responsible for calculating, paying, and reporting the amount of tax they owe. This system is used in many countries, including Indonesia. 3. Withholding system. A third party, usually an employer, is responsible for withholding taxes from the taxpayer's income and then remitting it to the state. An example is income tax, which is directly deducted by companies from employees' salaries. Taxes can be categorized into several types based on how they are collected and the object being taxed. Based on their nature. 1. Direct taxes. Taxes imposed directly on individuals or entities. Examples: income tax, PPH, land and building tax, PBB. Indirect taxes. Taxes imposed on transactions or consumption. Examples: value-added tax, VAT/PPN, luxury goods sales tax, PPNBM, based on the government authority collecting the tax. 2. Central government taxes, collected by the central government, such as income tax, PPH, value-added tax, PPN, and luxury goods sales tax, PPNBM. Local government taxes, collected by local governments, such as vehicle tax, hotel and restaurant tax, based on the tax object. 3. Income tax. PPH tax imposed on the income of individuals or entities. Value-added tax, VAT/PPN tax imposed on the consumption of goods and services. Land and building tax, PBB tax imposed on the ownership of land and buildings. Tax rates refer to the percentage applied to income, sales, or other taxable objects. There are several types of tax rates. 1. Fixed rate. Specific a tax rate that remains constant, regardless of the amount of the taxed object. Example: cigarette tax per stick. 2. Proportional rate. Flat a tax rate that remains the same percentage, no matter the size of the taxable object. Example: value-added tax, VAT in Indonesia, which is 11% of the value of goods. 3. Progressive rate. A tax rate that increases as the taxable object increases. Example: income tax, PPH, Article 21, where higher income is taxed at a higher rate. For degressive rate, a tax rate that decreases as the taxable object increases, rarely used.